Wall Street closes mixed on Friday. The Dow Jones gains for a 10th straight session while the Nasdaq closes lower as investors look ahead to the Fed meeting starting tomorrow. Stocks in the Asia-Pacific trade mixed while the Gift Nifty is indicating a lower start for the Indian market. Brent crude rises above the $80 mark on Friday, led higher by supply shortages and an escalation in tensions between Russia and Ukraine. Prices this morning slightly off highs. Reliance Industries delivers a good first quarter driven by its retail business, which reports its highest ever revenue and margin. This offsets a subdued performance in its auto chemicals business, while Geo2 posts a steady quarter. ICICI Bank's business momentum remains strong in the first quarter. Return on assets is at an all-time high, while asset quality is the best in 33 quarters. Kotak Bank's net profit beats estimates in a good set of first quarter numbers. Deposit growth is the best in 16 quarters, while the return on assets remains robust. Retail loan growth, however, remains soft. In key earnings to track today, Tata Steel's realizations are likely to remain flat, while the street will be watching commentary on capex and debt reduction timelines. Also keep an eye out on numbers from SRF, HDFC AMC and Canara Bank. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. It's a Monday morning. We did have a heavy week in terms of earnings post-Friday, market hours and the weekend as well. So we'll track all that for you. But first up, as always, we will look at what the Asian markets are doing right now. It was a mixed handover from the Wall Street, and that is something which is reflecting in the Asian markets as well. While we have the Nikkei, which is trading higher by 1.5%, the likes of Hang Seng is lower by 200 points. We have the Taiwanese index, which is lower by 0.2%. So that's really the picture. The Shanghai market's also lower by 0.2%. Kospi, on the other hand, is higher in trade, gaining around 0.6% as we speak. So mixed picture for the Asian markets, and the Gift Nifty, that'll come up for you on the screen, and we'll actually compare it with Nifty futures. So that one is indicating a downtick, a 73-point decline for our own markets after the fall that we saw on Friday as well. So looks like it will continue, and earnings, they will continue to be the big trigger for our own markets, especially since Nifty heavyweights have reported numbers now. But let's talk about the US markets. It was a mixed close on Wall Street on Friday. The Dow Jones and S&P closed just above the flat line. The Dow Jones, meanwhile, extended its winning streak, rising for the 10th straight day. The tech-heavy Nasdaq, the day's underperformer, closed 30 points lower, and all three major indices closed mixed for the week. The street looks ahead to a lot of earnings this week, and also the Fed decision policy, which is due late on Wednesday. And staying with the US markets, let's listen into what Goldman Sachs' Peter Oppenheimer for his views on the Fed's inflation challenge.
We do think that inflation has peaked, and we're very close to a peak in rates in the US, lagging behind in Europe and some other places. But we think the market is probably too optimistic about the pace and speed of rate cuts. So the balance for us, really, particularly when you consider the moves that we've seen up in equities year to date, is that we've got a relatively flatter picture from here.
All right, that's the global market action. But how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. What the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. First up, Ekta, let me come across to you. Tell us, what is the market setup looking like today?
Thanks for that. Well, yes, on Friday's trading session, we really had emphasis on HUL, which soured sentiment as markets snapped that two-day gaining streak. But the banks and the mid-caps were fairly resilient. We had FIIs which net sold for the first time in 6 sessions. For today, the markets will be reacting to Reliance Industries, ICICI Bank, Kotak, Yes Bank, RBL Bank, so a whole host of cues to watch out for. The US, like you mentioned, eked out a narrow gain on Friday. It was the 10th straight positive session. We have the SGX, which is indicating a little bit of a soft start at this point in time. Again, earnings will continue to be in focus. Canara Bank, HDFC Asset Management, Tata Steel, to name a few, which will be releasing numbers today. We also have the US Fed meet later on this week, ECB policy, Bank of Japan, so it is going to be a lot of central bank action. But as of now, we will be determinant in terms of what the earnings are doing, considering that emphasis on HUL really set the tone in terms of the markets and the importance of earnings this quarter as well. So it will be Reliance as well as banks which will be top of mind today, and a whole host of earnings along with the central bank meets which will be in focus through the week. So as of now, the Gift Nifty is indicating a little bit of a soft start.
Okay, a soft start is what we're expecting today. Thank you, Ekta, for that. But a lot of stocks that will be in focus. We did have a lot of earnings to track as well. Surbi has that list. Good morning, Surbi.
Good morning. So a lot of earnings. Let's start with Reliance first. There was strong earnings. There was improvement in the operational front. The O2C business did better than expected. Kotak Mahindra Bank, the deposit growth on a year-on-year basis was the best in 16 quarters. The ROA remains robust and the PNL beats all expectations. ICICI Bank, the quarterly ROA remains at an all-time high of 2.39%. The gross NPA and the net NPA ratios are the lowest in 8 to 9 years. RBL Bank, again a strong operational quarter. Deposits were up 8% on a year-on-year basis. Advances were up 21% on a year-on-year basis. Paytm, it was a weak quarter on a sequential basis. The total income was up 38% on a year-on-year basis. The EBITDA was 360 crores versus a loss of 275 crores same time last year. IGL revenue was down 7.5% sequentially. The operating margins came in at nearly 19% versus 13% in the previous quarter. Other than that, Yes Bank, AU Small Finance Bank, Titagar Rail, Vedanta, all will be in focus on back of earnings.
Okay, all right. A lot of earnings again. So let's talk about the F&O space now. Nigel is joining in with all those cues. Hey, Nigel.
Hey, morning, Sonal. In Friday's trading session, you had the IT stocks that were under some pressure. So you look at the net institutional number, that's the FI and the DI number together. They were sellers to the tune of close to 700 crores. And on an average, for July, well, there's been an inflow of close to 700 crores. So the swing was nearly around 1,400 crores. The FIs were a little bit cautious. They're selling in the cash market. They added some shorts in the index futures. And now, in fact, they still continue to remain net long on the index, but some short addition is what we saw. On the option side, well, they're buying calls as well as puts. What told you that maybe in the near term, their upside could be a little bit capped is because of the writing that we saw on the call side. They wrote more than 3 lakh call contracts, and they wrote it in the ratio of 2:1. So more number of calls in comparison to number of puts. And the PCR that we were highlighting that, yes, it's moved to overshort levels of 1.5, 1.6 odd. That's cooled down to around 0.9. That would mean that there's a lot of addition on the call side, and there would be some unwinding on the put side going by that ratio. And which strikes were active? Well, the 19,800, 19,900 call. Between them, there was close to around 1.3 crore shares added out there, which brings us to the levels. Since there is writing being seen at those levels, well, you'll see that 19,900 odd mark, that's the first level of resistance. On the downside, well, there was a fair bit of open interest at around that 19,650, 19,700 odd put. So that's where we're saying that around 19,650 to 19,680, that'll be a bit of a support zone. Back to you.
Okay, all right. Thank you so much, Nigel, Surbi and Ekta for joining us and prepping us up for this trading day ahead. Let's slip into a break. Up next, Reliance, ICICI Bank and Kotak Mahindra Bank have released their Q1 numbers. We'll get to the earnings fine print on the other side. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, Nifty heavyweights will be responding or reacting to their earnings that we got over the weekend. So let's start analyzing those. Let's talk about Kotak Mahindra Bank and beat expectations with their first quarter earnings. Abhishek is joining us with the details.
Well, the deposit momentum was pretty strong for Kotak Mahindra Bank. So, deposit growth of 22% YOY is perhaps the best that you are seeing in last 4 years. And about 6.5% is perhaps the best that you are seeing in last 13 quarters on a sequential basis. So, ROA, that is return on asset, continues to remain robust at about 2.8%, which is a record in itself for Q1 FY24 in the banking sector. Net interest margin remains strong, 5.57% on a quarter-on-quarter basis. It has declined, but it remains among the best in the large cap banks. So gross NPA ratio is the lowest in last 32 quarters, coming in at 1.77%. The restructured book at 0.19% is perhaps the lowest that you are seeing in last 3 years. The consolidated ROA and ROE of the bank remains strong. On the flip side, the retail segment loan growth is pretty weak on a sequential basis. It's grown at 2.2%. Subsidiaries performance is soft or weak. Quarter on quarter, there is a PAT decline amongst all the subsidiaries by 0.4%. Slippages have increased quarter-on-quarter, seasonal in nature, and net NPA ratio has also increased on a sequential basis. So, CASA ratio at 49% is perhaps the lowest in last 22 quarters. In terms of the performance, PNL has beaten our poll. Back to you.
Okay, that is about Kotak Mahindra Bank, but even ICICI Bank reported strong set of numbers. Tell us more.
Well, records galore in terms of ICICI Bank's performance in Q1 FY24. Quarterly ROA, that is return on asset at 2.39%, is perhaps the highest that you have ever seen over there. Gross NPA ratio and net NPA ratio are the lowest in last 8 or 9 years, coming in at 2.76% and about 0.48%. Deposit momentum is pretty strong. So while SDFC Bank was busy with its merger, ICICI Bank and Kotak Mahindra Bank have made good grounds over there. So deposit growth was 17.9% YOY, perhaps the best in last 9 quarters, and sequentially it was at 4.9% when compared to SDFC Bank's growth of 1.6%. PAT growth of close to 39% is perhaps the highest that you are seeing in last 4 quarters, continues to outperform SDFC Bank. The gap between ICICI Bank's quarterly ROA and SDFC Bank's quarterly ROA is now 35 basis points, which is a record in itself. So unsecured book is the highest in last 23 quarters, and that's aiding the net interest margin, and it is at 19.9% of the total loans. Restructured book is the lowest in last 10 quarters, watch list lowest in last 30 quarters, and overseas book continues to decline in the overall portfolio. It's now at just 3%. On the flip side, CASA ratio at 43.3% is the lowest in last 12 quarters. Risk weight asset to advances, that's increased and is on the higher side in last 11 quarters. Core operating profit growth on a sequential basis is a tad bit on the slower side at just 0.15%, which is the lowest in last 12 quarters. PNL, both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, all right. That is about ICICI Bank. In fact, let's also hear out what the management of ICICI Bank had to say at their first quarter earnings con call.
The gross NPA additions were 5,318 crore rupees in Q1 2024. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 3,511 crore rupees in Q1 2024. The gross NPAs written off were rupees 1,169 crore rupees in Q1 2024. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The NIM for this quarter was 4.78 as compared to 4.9 in the previous quarter and 4.01 in Q1 of last year.
Yeah.
Okay, I think we have been saying that the retail deposits rate of increase has been slower than what has been the rate of lending.
Okay.
So Q1 2024, the sequential decline actually reflects the lagged impact of repricing of deposits, which has been sort of partly offset by increase in loans and investment yields. Secondly, I think as we have been guiding even in the previous calls, the overall decline in NIM was very much in line with our expectations. But broadly, if I look at, I think it will be good to look at the full year FY24 in the context of what we did in FY23.
That is ICICI Bank, but let's stay with earnings. Big boy Reliance also reported a strong set of first quarter numbers. Sonia Shenoy is joining us with the earnings fine print. Sonia, tell us more.
It was a good set of numbers, no two ways about that. Strong operational performance overall.
And like you mentioned, the star of the show really was the retail business. We'll talk more about that. But if you look at it, the oil to chemicals business was better than what the street was estimating, definitely. But the retail business with its 20% growth is what really took our breath away. Now, the Reliance Retail saw over 555 new store openings, and it was a steady quarter from Reliance Jio as well. We'll talk more about that later. The subscriber addition was strong. The ARPU increased. The balance sheet of the company overall has also improved along with the P&L. So the net debt is now flat quarter on quarter, adjusted for the GFSL demerger. Just to give you the core numbers, they'll come up for you on your screen. Revenues on a consolidated basis are at 2.07 lakh crores compared to 2.19 lakh crores same time last year. On a year-on-year basis, the core EBITDA and the margins have improved. Margins have improved to 18.3% versus 17.3% year-on-year, while the net profits are down almost 11% on a year-on-year basis, coming in at 16,011 crores. The management commentary has also been strong. But as I said, consumer-facing businesses was the star of the show. Okay, all right, Sonia, thank you so much for that. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Still tuned to Power Breakfast on CNBC TV18. It's time to talk about commodities. A lot of action happening in that space. Manisha Gupta is joining us with all the update. Hey, Manisha, morning.
Morning, Pavitra. Thank you for that. Well, after hitting a 12-week high on Friday, the crude oil prices seem to be easing off on Monday morning right now. There is a strength in US dollar ahead of the US Fed, Bank of Japan, ECB central bank meeting, all of that happening in this week itself. And then there are statements from UAE suggesting that they may take further action to support the oil markets going forward. At this point in time, of course, with the kind of cuts that OPEC and Russia are doing, the street is anticipating some kind of a supply deficit in this current quarter and the last quarter of this calendar year as well. In the meanwhile, all markets around the world are hoping that China will come out with a targeted stimulus measures. China already has worked its way in the sense of EV sales and consumer electronics, but property sector is something that is still awaiting more big bang stimulus measures coming in from China. So ahead of that, a bit of decline is what we've started the metal prices with. So whether it is steel, copper, iron ore, we are trading slightly in the negative for the markets right now.
Okay, all right. So that is all about the commodity space. Thank you, Manisha, for joining us with that update. Quickly taking a look at what the Asian markets are doing. Continue to be mixed after that mixed handover that we got from the Wall Street. Taiwanese index, though, has made a recovery from the lows, and Hang Seng has seen some more fall from the highs. So it was down 1% when we started the show. It's down 1.3 now. And Taiwanese index has recovered from the lows. It was down around 0.3%, higher by 0.2% as we speak. Gift Nifty, that will also come up for you on the screen, and that one is indicating that the start for our own markets will be in the red, 76 points lower there. And of course, a slew of earnings, Reliance, ICICI Bank and Kotak Mahindra Bank will also decide the way our markets will move today. We'll take your leave on this edition of Power Breakfast with that. Stay tuned. Bazaar Morning Call comes up next.